of our three-part web series, Smart Moves in Challenging Times, Experts on Your Side. Our mission is educating you on the power of using experts to help you decode Medicare, long-term care, and taming the volatile stock market. When you're empowered with accurate and efficient information, you can protect your family well, spend your health care dollars well, and remain calm and confident in your daily lives. The group of experts we have for this series includes Keith Knabb of Affordable Medicare Solutions. He presented this past Monday, and recording of his presentation is available on his website. Michele Perloe of Perloe Financial, who will present today, and myself, Angie Rakup of Financial Care Providers, who will present on Friday. Each expert will highlight one area of information in each 20-minute program. Michele Perloe's area of expertise is long-term care planning. She's one of only a couple of dozen providers across the country accredited by the American Association for Long-Term Care Insurance. Every day, Michele works with individuals and families across the country regarding their long-term care planning and estate. We will offer a time to answer questions at the end of the presentation, and you're welcome to use the chat feature to send questions during the presentation. Michele, please introduce yourself to the audience.
Thank you, Angie, and good morning, everybody. As Angie said, I'm a long-term care specialist. It is my area of expertise, but I am also licensed to do life insurance, annuities, disability insurance. But what brought me to become a long-term care specialist was my own family's experience with long-term care. Unfortunately, we are the poster children for a family needing long-term care. My father wound up with Parkinson's. He required care for many years before passing away. My mother-in-law was in a facility. She required caregiving, had a stroke while she was there, and then spent many more years with more advanced care. And when my father passed away, he left a wife, my stepmother, who had no children of her own, and I currently take care of her. She has dementia. So when it comes to long-term care and caregiving, as I said, unfortunately, my experience led me to want to help other people navigate this very difficult and challenging road. So when we talk about long-term care, we're really talking about the activities of daily living, or the ADLs, as they're known as, and there are 6 of them. It's being able to feed yourself, dress yourself, bathe yourself, toilet yourself if you have continence issues, or if you cannot transfer yourself, get up and down out of a chair or your bed on your own. If you cannot perform 2 of those, not all 6, just 2, if you cannot perform 2 of those, or simply if you become cognitively impaired, that's when you can use these plans. The nice thing about the plan is it is your personal doctor who makes the determination, and the insurance company doesn't care what brought you to that place. So whether it's the result of an accident, an illness, or normal aging, it doesn't matter. The insurance company will pay for your care. So in today's world, there are really 3 different ways that you can do long-term care. The first, and I would say probably the most used, is traditional long-term care. This is a policy, you could think of it like your homeowner's insurance. You buy it, you pay for it every year for the rest of your life, and God willing, you'll never have to use it. But you would have the protection in case you needed it. Then a popular way of doing them are these hybrid policies. And when we're talking about a hybrid policy in terms of the actual caregiving, when you use it, it works almost identically to a traditional long-term care policy. The difference is in a couple of things, starting with the funding. There are different ways you can fund a hybrid policy. Unlike traditional long-term care where you'll pay that premium every year, with a hybrid, you have options. Depending on the company, you can write one big check, pay for it, and you're done, never look at it again. You can pay for it over the course of 5 years, 10 years, 20 years, depending on your age. Some companies will even let you pay for it every year for the rest of your life. So that's one difference. The other difference, which is unique to a hybrid, is that any money that you put into that plan for your care when you pass away, if you have not used it, it will come back to your family, your beneficiary, a charity, as a tax-free death benefit. So it's not like you're buying yourself a lot of, life insurance. Nobody's getting $1 million, but whatever money you put into that policy over the course of your lifetime, somebody will minimally get that back when you die. The other difference is that with a hybrid, you can surrender that policy and get most, if not all, of your money back. People like that feature. They like knowing they can get their money back, but truthfully, it's really a moot point because less than 1% of people that buy a hybrid policy ever surrender it and turn it in. The other option is permanent life insurance with a long-term care rider. That would be my least favorite way of doing long-term care. You don't have any leverage on the long-term care, and there are a lot of other reasons I don't recommend that, generally speaking, although there are a couple of circumstances where it might make sense for you and your family. The other thing I will tell you is there are such a thing as a short-term option. So kind of short-term, long-term care, I know that doesn't make sense, but you can buy a policy that won't offer quite as robust coverage. It will cost less, and frankly, they're a little more lenient when it comes to underwriting. So for some people, it's an excellent option because it might be their only option. The other thing you can do is there are long-term care annuity products out there. The nice thing about those is you can buy those products well into your 80s. With traditional long-term care, most companies will sell it to you up to the age of 79. Some hybrids go to 79, most up to 75. So these long-term care annuities give older people more options as well. So why is long-term care so important? Well, there's many reasons, but the most important reason is it will give you freedom of choice. It'll generate the money so that you can have the type of quality care that you're hoping to have if, of course, and when you need it. It'll provide that money, and I can tell you truthfully, people come to this for different reasons. Some don't have the money to pay for care if they were to have an event where they require many years of caregiving. Other people do have the money. They could pay for it themselves or believe they could pay for it themselves, but they don't want to. They want to protect their assets for family members, for loved ones, for charities. I have many clients who have no children but purchase a hybrid policy because they want to protect their assets, and they leave that money to a charity as well. Of course, it eases the financial and emotional burden on family members. Speaking again as a person who's dealt with this with many members of my family, I can tell you I could never have anticipated the impact caring for my father had on me. The worry, the anxiety, the phone calls in the middle of the night, the doctor appointments, nothing can prepare you for that. It is enough of a burden to have to worry about that portion of it. But if you have to worry about how you're going to pay for that care on top of that, and you have a loved one that you want to have receive the best care out there and they can't afford it, it really becomes a very difficult situation. The other thing is, and I'm not sure if you all know this or not, is that long-term care plans are tax advantage in a number of ways, but the most important way is any money that is paid for your care out of a qualified long-term care plan is tax-free money. If you buy a plan, for example, and your plan pays $5,000 a month for your care, you get $5,000 for your care. There's no tax consequence on it. It doesn't count as impugned income to you. If you, like most of us, have the majority of your savings in tax qualified accounts like 401ks, you know if you need $5,000, you probably have to take out $7,000, $8,000, $9,000, pay your ordinary income tax, so you have the $5,000 to pay for your care. Most people, when they think about long-term care, they do think about a nursing home. But the truth of the matter is 73% of people on claim receive their benefits outside of a nursing home. So most people actually are receiving care in their own home, is almost 50%. And then the other 50% is fairly evenly divided between assisted living and nursing home care. I can tell you most people that I speak to are buying a long-term care policy because their intention is to stay in their own home. That's what they'd like to do. You certainly don't have to. In fact, you can have one feeling about it today when you buy a plan, and you can change your mind many times. When you actually go to use your plan, you may start off using it to receive home care, and then in fact, after a period of time of receiving care in your home, you may need to or decide you'd like to go to a facility. So you're not relegated to use it in any particular way. You know, I always like to tell people that all the money in the world cannot buy you long-term care. Only your reasonably good health can. And I don't want to frighten anybody. You don't have to be in perfect health in order to qualify for long-term care. And it would take us quite a long time to go over all the health conditions, the different companies, how they look at it, the combinations. But I'll generalize and say this. 30 to 40% of people who apply get turned down because of health reasons. So it's very important to apply when you are healthy enough so you can get qualified. So waiting is usually not the best strategy. So what are the changes on the horizon? Well, price increases are one thing that I'll talk about, and really it has to do with our current economic environment. Most of the traditional companies have not had a price increase, but some of the hybrids, in fact, have recently and intend to do so in the not so distant future. Of course, these companies have a responsibility to their policyholders. They take that responsibility very seriously. They have to have the reserves to pay any and all claims. And so because they're in it for the long game and they invest their money for the long game, right now the 10-year Treasury note pays less than nothing. And some other economic indicators have made it prudent for them, so they have raised prices. Not dramatically, but they're going up. Also, some of the companies have changed the age limitation, so they have lowered it. Not many, but a few. And as far as our current situation with the coronavirus, the greatest impact it currently has had in the long-term care space really has to do with traditional companies that do full medical underwriting. And for people who are 65 and above, that typically necessitates a home visit from a nurse. Because of the current situation, the insurance companies cannot send nurses into many people's homes. So some of them have temporarily suspended taking applications from people who are 65 and above. It is certainly not a permanent change, but that is happening currently. It does not apply right now to the hybrids. Again, generally speaking, they do not do home visits. Some do, some don't, but that is an issue currently in the marketplace. So very importantly, people tend to think about what long-term care may provide, but they don't necessarily look at it. What are the consequences to my life, to my family, to my financial health of not having long-term care? Well, certainly if you don't have the money to pay for care, you will be dependent on government options. And the other thing I can tell you, or many things I can tell you, is I've never had anybody call me up and say, Michele, my goal is to go to a Medicaid nursing home. Most people would do anything to avoid a Medicaid nursing home. Certainly, if that is your only option, it is better than nothing, but most people would like to avoid that at all costs. The other issue is you can deplete your savings. I know it might seem improbable, but many people require care for many, many years. The average length of care, if we're talking about statistical averages, is 3 to 4 to 5 years. But for those people who wind up with Alzheimer's or dementia or other illnesses that require long periods of caregiving, their average length of care is 8 to 12 years. You can see how that can actually wipe out most people's savings, and you can in fact spend millions of dollars on caregiving. I have a very dear friend, and I remember it very clearly. She and I had a conversation a number of years ago. Her mother wound up in a nursing home the last 10 years of her life, unfortunately. She depleted her entire life savings, and in fact, the last year or so, she wound up on Medicaid. But what my friend told me was, my parents worked hard every day of their whole life to save that money, and their intention was to leave it to their children and grandchildren. That's why they saved their money. That's why they worked so hard. Their intention was not to leave that money to a nursing home. So that is a real issue for a lot of people. And the other thing I always say to people when it comes to depleting their savings is, which account would you deplete first? Have you really thought about how you're going to liquidate your money to pay for your care if you need it? I spoke about this earlier, the financial and emotional burden it places on loved ones. I can tell you, having watched my father suffer with Parkinson's, thank God we had a long-term care plan, because how we could have paid for all the care that he required, it would have been very difficult, especially in light of the fact that my mother-in-law was in a facility at the same time. So again, the emotional burden it places on you is enough to worry about. If you have to worry about paying for that care as well, it is really too much to bear. And finally, being forced to withdraw money in a down market. For most of us, if we have our money invested and the economics are not doing well and our investments may be down, well, we can choose not to take vacations. We can choose not to eat out in fancy restaurants. We don't have to buy a lot of clothes. We can put that new car or that home renovation on hold till the markets recover, which invariably they do. If you require caregiving, there's no hitting the pause button. You can't wait and take care of it in 6 months or a year or 2 years when the markets recover. You have to start paying for your care now. And when you pull money out of a depreciated asset, you can never hope to fully recover. That'll just be an impossibility. So that's a very important point when you talk about long-term care. And finally, I'll mention this. Long-term care products are guaranteed financial products. Unlike investments, which we all have and we need to have, our investments can go up. Generally speaking, they can go down. Long-term care is a guaranteed way to pay for your caregiving. So I have a lot of things I can tell you about long-term care. I can go on and on for quite a while, but the most important thing I want to leave you with is long-term care is completely customizable. This is not something where you're going to pick plan A, B, or C. This is an in-depth conversation about your health, your wealth, what's important to you and your family, what your risk tolerance profile is, so that we can put together a plan that makes sense for you and your family, so that you have peace of mind, that you'll be able to pay for care should you ever need it. I have a fairly short consumer guide for long-term care, which I'm happy to email you. There's my email. It's mperloe@perloefinancial.com. Or you can feel free to call me. My number is 678-427-8070. That's my cell. I have it with me at all times. So please feel free to call me if you have any questions in particular about your situation, what your costs would be, what your options are based on your health. I'm happy to give you any and all specifics. So I want to thank you for joining us today, and taking time to learn a little bit about long-term care.
Thank you, Michelle. That was very interesting and certainly timely information. Families need your service for sure, and I know myself and my family, we have a whole history of people who've had long-term care and things have gone smoothly, and people who have not and things have not gone well. And you do all of this at no charge. It's a blessing during this challenging time. We can send you these slides. You can get a copy of these slides by emailing Michele Perloe at mperloe, M-P-E-R-L-O-E, at perloefinancial.com, P-E-R-L-O-E, financial, Financial.com. Friday, I'm going to be speaking, and we're going to be talking about actual moves you can make in a volatile market. I'm a CFP, and I really want to be able to share the things you can do now to help you later. Thanks for viewing today. You're going to get a $15 Uber Eats meal card, and we look forward to seeing you Friday at 10:30. Thank you.
Thank you.